Jeff, what do you make of the decision?
Well, I think it makes a lot of sense in the current environment. I mean, one, there was a lot of tensions between with the U.S. administration that were highlighted by the coordinated SPR announcement, a few weeks ago. Second, it takes the pressure off the administration to cut a deal with Iran that would have provided barrels in the first half of 22. And then third, the shale producers are budgeting right now for their CapEx programs for next year. So the net of this means less spare capacity in OPEC and likely less shale or less Iranian oil. So it reinforces that medium to longer term supply driven bullish story. But yeah, near term, it's a blow to sentiment and to fundamentals. But looking where prices are relative to the underlying cost structure, it's pretty hard to arguably go much lower than where they are today.
Yeah, but Jeff, it feels like if they really wanted to kind of throw a line to President Biden, they would have increased production. Do you think that was on the table before Omicron?
Well, I think the market had priced in no production increase for the month of January. So the fact that they're increasing by 400 a day is above market expectations. And I have a feeling, all of this Omicron uncertainty developed over the course of the last week. We're down almost $15 a barrel in 1 week's time. One thing I want to emphasize here that made it much more vicious than what we've seen historically is that you had a negative gamma effect going on. There's very little liquidity in this market right now. The producers have to delta hedge the strikes at the the dealers have to hedge the strikes of where the producers hedge out. And as the market starts to follow, they have to sell more and more and more and more. That amplified the magnitude of the sell-off. So at this point right now, it's pricing in, a disaster scenario around Omicron. We estimate it's pricing in like no plane flying around the earth for the next 3 months. So, the market's overshot to the downside.
So, Jeff, where are we year end?
I think at this point right now, you have a lot of investors take risk down because it's been a very good year in commodities. And you can see it in the liquidity in the market overall. We would think that it wouldn't be until after the first of the year that you see risk come back into this market. The medium-term story is very much intact. In fact, you could argue with the lower prices, it's even, more positive than what it was before. But near term, there's still a lot of uncertainty around, with the Omicron. And I think the willingness for investors to come in and put high levels of risk on right now is pretty limited. I would expect it to be a grind higher going into year end with the real potential upside after the first of the year.
Hey, Jeff, I also wonder what's going to happen with volatility because if anything that we know that OPEC hates volatility. They want a stable oil price because it helps them really foresee what demand's going to be. If we continue to see the volatility that we've seen in oil, what kind of rhetoric or action do you think we may see from OPEC Plus?
Well, I would argue you're developing a volatility vortex in many of these energy markets. As the liquidity drops off and investors get discouraged in the space, that reinforces higher volatility. The higher volatility then discourages less investment and less liquidity. So it's just a vicious cycle in terms of creating a higher level of volatility. The only way you're going to stop that volatility is through increased investment and increased liquidity through more investors coming into the space. But the hurdle rate between Omicron and all the recent developments just gets pushed higher and higher. So, it'll be difficult to tame the volatility as we go into the winter months. It probably won't be until we get to the backside of the winter, sometime in March, that you could really start to turn down the volatility.
If you're in the United States and you're looking at the SPR release you just coordinated, would you conclude from today's reaction that it did work? Or is this something else happening here? The Saudis want to turn the temperature down. They don't want this sort of relationship to continue in the way that it is. I'm just trying to understand the back channel here.
Well, the SPR announcement, right after it, the market rallied, and the market was still positive until you got the Omicron news. Once the Omicron news hit, that's when you created that vicious downdraft. Because you think about the immediate reaction is shut down borders, which impacts oil. In fact, we look at the two commodities that are hit the most here. It's oil and cocoa, the two that are sold in there, ones that travel through jet, and cocoa is sold primarily in airports. So the commodities most exposed to international travel were the ones hit the hardest here. And so when we think about, the SPR release, the market had shrugged it off, was rallying. I'd argue really what we're witnessing here is the uncertainty generated by Omicron, but also what made the downdraft so vicious is no liquidity, and then you had a negative gamma effect on top of that.
All right, Jeff, before we let you go, we had JP Morgan seeing 2023 $150 oil. Bank of America says we could see spikes next year to 120 for Brent. What's your upside risk for next year?
Oh, the upside risk, I think, is substantial going into next year. I think putting a number around it's very difficult because there's going to be a lot of volatility due to all the reasons we talked about. And right now, the market's repricing carbon. In terms of thinking about where that equilibrium is, I think there's a lot of uncertainty. In the 2000s, I threw out a lot of numbers. I just don't think, that's very useful throwing out. The way I like to describe to our investors, get long, buckle your seatbelt, hang on for the ride. And if this last week didn't demonstrate to you why you have to have that seatbelt snug tightly, I don't know what else. I'd argue, it's going to be a lousy Sharpe ratio, but the upside potential here, I think, is enormous.